Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Chris Curtin, who's the CEO of AA Insurance. Welcome in, Chris. Thanks for coming in to talk to us. Look, you made an interesting speech last week at the Insurance Council of New Zealand's conference. You talked about how the Christchurch earthquakes have resulted in a general and unfounded mistrust of insurers, which insurers have to remediate. I thought this would be an interesting point to start with. Why do you think this general and unfounded mistrust has cropped up? Is it something the insurers have done wrong? Is it some public perception that's developed? And how can insurers combat this?
Well, I think generally speaking, Canterbury threw up this issue. We had no idea that this was going to be as complex as it turned out. And as an industry, we've learnt a lot following Canterbury. If we had our time over again, I think what we would have done is to have developed deep relationships with the other parties involved, so central local government, the EQC. But really the truth is we had no idea that it was going to be that complex, even to the extent of how our own policies were going to respond to our customers when you're talking about multiple events in a short time frame and how that would work with the EQC. There's the issue of sum insured, which is quite interesting, looking at how Canterbury's turned out. And I think if we had had a different system and not the open-ended replacement system, I think we would have been able to sort out the cost of rebuilding our customers' homes a lot quicker. So that's interesting as well. In terms of how we've done, I think from an AA insurance perspective, we've sorted out about 67% of our customers' claims for home, and we've finished all of our contents claims. We've still got 1,400 left to do to rebuild or repair or settle, and I think my message to our customers is that I can reassure them that we're in it for the long haul, we're here to help them, and we're absolutely committed to getting their claims sorted out for the long term.
You used the word complex. That's interesting. I mean, what made this situation more complex than insurers anticipated?
The notion that we would have such a series of big events, one after the other, how the EQC related to the insurance industry, how we would work together in terms of land repair, how zoning would come into it. All of those complexities were really not thought about up front, and I think if we had thought about those things and the possibility of such a complex thing happening, we would have been in a better position, I think, to be up front with customers, explain to them what the timelines were likely to be, talk to them about what they can expect next, and to try and get in a position where we could settle those claims a lot quicker.
And look, you led the way in this move to sum insured from the square metre replacement cover calculations. What sort of impact do you think this could have if we had another sort of Christchurch situation, even just a one-off rather than a whole series of earthquakes? And is there, I guess one way of looking at this is that this has perhaps shifted risk to customers. Do you accept that?
Yeah, look, Gareth, I'll deal with the first part of the question first. I think that in a sum insured environment where customers are working out how much it costs to replace up front before the event is a much more effective way of doing things. And I think in a sum insured environment, if we had another Canterbury situation, God forbid, we'd be in a position to be much quicker in terms of settling those claims, so particularly those people that wanted to take a cash settlement. So I think a sum insured environment would have been a lot more helpful in a Canterbury situation. In terms of the shifting responsibility, I think if we shift our memories back, it was only before the late 1980s, I think it was, that New Zealanders insured their homes on a sum insured basis anyway. So it was only after that time that we moved to open-ended replacement. What Canterbury's shown us is that that's completely unsustainable because the reinsurers didn't have a really good view about what their risk exposure was. So when it comes to sum insured, I think this will be more helpful. One of the surprising things about Canterbury was that it threw up all of these issues around the types of homes that we had insured. So for example, we had very limited information about a customer's home. We might have had the year it was built and the size, But when you put two homes together that are approximately the same size, clearly House A and House B may be completely different. So House A may have been, for example, built on a flat section. It may have been a pretty standard spec home, whereas House B might have been, a Cowrie villa, marble floors in the bathroom, a plumbed-in barbecue situation out the back. Now, clearly those two homes are completely different. So what we're doing is we're asking the customer to take responsibility for establishing what the sum insured is up front rather than after the event, and I think that's a good thing. So are we shifting the responsibility to the customer? And I think the answer is, to a certain extent, we are. We have worked really hard to put calculators in place, online calculators, for people to be able to do that. And of course, customers can go and get a valuation. But when you think about it, there's no one better than the customer in terms of knowing about their own home. So it does make sense that the customer does know more about their home and should be able to establish their sum insured up front.
Now, by international standards, and especially by, I guess, some of the standards as compared to some of the other Pacific Rim countries and areas that are earthquake prone, like I'm thinking of California and Japan in particular, New Zealand has a high level of insurance. But obviously costs have gone up a lot, and obviously with the sort of fallout from Christchurch, with all the horror stories of people waiting forever and to get their insurance payouts or settlements or rebuilds, and sometimes it not panning out obviously as they want. Are we running the risk that the insurance levels in New Zealand fall significantly here, and what concern is that for you guys in the industry if it does happen?
Well, I think if we start with the key that New Zealand is a highly insured country, and we have to do what we can to make sure that continues, because the fewer people insure, the higher the cost for those remaining who do. So, just to turn to a hobby horse of mine is really more about how we can make insurance more affordable for all New Zealanders. And I think there's probably several parties that can play a role in that. And if we start with insurers and reinsurers, the key to that is that we work together to make sure that insurance remains available and affordable by looking for opportunities like the sum insured situation that we've put in place. We need to find more solutions like that. I think regulators have a role to play, and particularly in terms of creating building codes that create resilience, ensuring that we don't build property on unsuitable land, and making sure that we're proactive in terms of mitigating risks like for flooding, etc. I think we need to look at things like levies, and I know I've said this before, but a good example is the fire services levy. This is a levy that's paid for by people who are insured, but the benefit goes to all New Zealanders. So I think there's a far more equitable way of collecting that levy. EQC levy is interesting. Only people who buy insurance are covered for earthquake through the EQC, but I think we need to do more to make sure that levy stays appropriate so that we don't see big jumps in costs like we've just seen recently. I think consumers play a part, and I think from my perspective, consumers need to create some competitive pressure on prices by shopping around. So I think they have a role to play. And insurance companies specifically have a role to play. And our role to play is to find ways to become more productive. What I mean by that is that we need to work really, really hard to manage our claims costs and our expenses to ensure that we don't overburden our customers with increasing premiums. So if we get all those things together, I think we're going to make pretty good progress in terms of keeping affordable for Kiwis.
You look in your Insurance Council of New Zealand speech, you did mention this idea of consumers not playing their full part in driving competition, with about 1 in 8 people switching insurers when they renew their policy. So are you saying that you actually want AA insurance customers to shop around more?
Yeah, look, it does sound counterintuitive, doesn't it? But at the end of the day, it does make sense that people should shop around. It doesn't matter if it's you're in the market to buy a fridge or a washing machine, insurance, any goods or service, people should shop around. There's nothing better than a competitive insurance market. So consumers do have a part to play. One of the things that astounds me is that at a time when insurance premiums are at their highest level, that only one in eight people actually do switch at renewal, and I think that's extraordinary. And I think if consumers played their part, and I think if they thought about the issues that they really need to when they're buying their insurance. So, for example, I would never encourage anybody to shop for insurance on price alone. That's simply not the thing that people should do. What they should be looking for is the cover that suits their needs, and making sure that the insurer that they're dealing with is financially strong. But at the end of the day, when those things stack up and they're very similar, then people should shop around for the best deal for themselves. And that might mean, for example, splitting your insurances up. And I know nowadays people want to put all of their insurances together, but that's not necessarily the best outcome for individual customers. So yeah, it's counterintuitive, but I think what I am saying is that consumers have a part to play.
And look, we're obviously heading into an election year next year, and we've had the Labor Party with the new leader David Cunliffe come out with this idea of a Kiwi Bank style state-owned insurer. David Cunliffe talked about improving competition and service and reducing premiums. I think he was specifically looking at the housing and contents insurance markets. Do you think this sort of state-owned insurer is something that New Zealand needs?
Well, look, it's interesting. I personally welcome competition. I think the key question here is whether something like this would have enough competitive pressure to drive premiums down in the areas that we're concerned about. And if you think about the affordability issue again, it's very much focused on home insurance. Look, I'm certain that competition's good for consumers. A good, efficient, competitive insurance market is great for consumers. But if you look about the issue of affordability for home insurance, you've got to look at the component of premium. And one of the largest components of home insurance premiums today is the cost of buying catastrophe reinsurance. So any company entering the insurance market has to buy reinsurance. Presumably they will have to pay the same sorts of rates as the other players in the market, and therefore the assumption you make is that they'll have to charge similar premiums to us. I think if you look further at the concept of a government-owned insurer, there are a couple of other issues that we probably should consider. I think the first one is we already do have a government insurer in New Zealand. I mean, the EQC is a government insurer. So what are we actually looking at here? And I think you've got to look at the upside and the downside. So in good times, the notion that capital and profit stays in New Zealand is fine. But I think you also have to look at the risk as well. So at times when things aren't as good, the risk stays in New Zealand. And of course, we've already seen a situation after Canterbury where an insurer has failed, a large insurer, and the New Zealand taxpayer had to come and help fund that. And this is an organisation that had significant members' reserves. So a New Zealand-owned insurance company is the New Zealand taxpayer ultimately is going to be up for anything that goes wrong. So, I mean, I think that's an interesting thing to look at. And then when you look at insurance companies like AA Insurance, which is part of a reasonably large international company, when you look at how we buy reinsurance, there are some advantages. So, for example, there's an issue called diversification benefit, which is basically when, as part of an international company, the reinsurers are not putting all their eggs in the one basket. So what they're doing is offsetting New Zealand-only risk of, say, earthquake against Australian risk of, say, storm and flood. Now, that allows us to buy reinsurance at a lower rate. So a New Zealand-only based insurer would not have the opportunity benefit of getting a lower rate because all of the risk is really focused on New Zealand. And I think there's another important issue, and that is that as part of international insurance organisations, when you have a situation like Canterbury, where there's a huge amount of capital required then we have access to our parents who can funnel huge amounts of capital into New Zealand when required very, very quickly. So I think, in summary, we welcome competition. I'm not sure that a government-owned insurer will do the things that have been stated that they want them to do, and I think any government should sit down and have a really good think about both the upside and the downside.
Now, we have the lawyer Andrew Hooker write the occasional article for us here at interest.co.nz, and he wrote an article on this idea of labours. And he said he didn't like this idea, but he said what should be done instead is more regulation of current insurers. And I'll just read you a couple of ideas that he threw up. He said one is where insurance companies can get out of paying claims and can terminate policies if you forget to tell them something that they never even asked you about. So he says that needs to be changed. And the second point was the circumstances in which insurers can refuse to insure people should be regulated, because if you've ever had a policy declined or cancelled, whatever the reason, you'll find that almost no one else will insure you either. So I'd be interested in your views on, one, the idea of more regulation of insurers, and two, the two specific examples that he threw out.
Yeah. I'm sure Andrew wouldn't be surprised that I don't necessarily agree with his views, but let me deal with the first one about regulation. So regulation, there's examples of recent regulation that's come into the financial services industry and specifically insurance, and typically they have been there to cater for the benefit of 100% of insurance customers. Whenever there's regulation, there's a compliance cost, so all customers end up paying for that. When you're talking about things like non-disclosure, which Andrew is talking about, you need to put into context whether the solution is going to be a bit like a sledgehammer to crack a nut. So when you look at numbers, I can only speak on behalf of AA Insurance, but let me quote you a couple of numbers. In the year to October 2013, there was something like 96,000 claims that we managed. Of those 96,000 claims, there's about 102 that were declined for this issue of non-disclosure. Now that's 0.1% of the total claims that we're talking about. So when you talk about putting in place regulation to cover off a very small number of people, I don't think that's necessarily the right way to go. Now, if I talk specifically about AA Insurance, there is what we try to treat our customers fairly, and there is no way that we would ever decline a claim on the basis of something that we didn't ask a specific question about. So if we don't ask the question, then there's no way that we're going to pull out something out of the ether to try and decline a claim. So I think that's a really important point to note. On the other issue of a customer being declined insurance, look, yes, insurers do ask that question, have you been declined insurance in the past? And again, I can only speak on behalf of our insurance, so we ask that question. If the answer is yes, then we treat each case on its own merits. We understand that there are a whole bunch of reasons why someone may have experienced that sort of outcome. So there's no unilateral sort of rule that if the answer is yes, that you won't be able to get insurance. So I think I would encourage customers out there to ask that question of their insurer and see what the response would be. So I don't think that that's generally what goes on out there, and I think Andrew and insurance lawyers would see the worst of the worst cases, but I don't think necessarily that more regulation is going to be in favour of consumers.
Well, thanks a lot for that, Chris. That's Chris Curtin, who's the CEO of AA Insurance, and I'm Gareth Vaughan at interest.co.nz.